This is Wealthy AF, your ultimate guide to understand what it truly means to be wealthy AF. And today's guest is Javier Suarez, and Javier is the president and founder of Suarez Capital and Investments, LLC. When Javier was only 19 years old, he was calling on off-market properties in Washington, D.C. and selling them to investors. Realizing there was more opportunity as a realtor, he managed to independently sell $20 million worth of real estate by the age of 22. Javier's success can be credited to his dedication to learning the industries inside and out and to his family's multi-generational real estate. Here's what I could tell you about this man. I spent some time with Javier. He's a sharp mind. He's a sharp guy. He really knows this stuff. So Javier, welcome to the podcast, brother. It's a pleasure to have you here, man.
It's an honor, brother. Too bad we don't have any Cuban sandwiches to enjoy this time.
Yeah, last time we met, he took me to a little Cuban spot, man. The best Cuban. Actually, it was a medianoche we had, right? Great freaking sandwiches they make there, and I had the cafecito, so it was a great time, brother, great time. Anyways, let's get right into this, man. Javier, tell us a little bit about you. Tell us about your story. I know you're Cuban-American. Your family migrated here from Cuba. You're first generation American. Tell us about that and how you got involved in real estate.
So it started with my grandmother. We were back in, my grandparents were actually in Cuba. And one day the military showed up at their front door and were looking for my family. By that time, my grandmother was already in the car on the way to the airport, and they just picked up whatever they could, cigars, rum, took it over to America with about 3 kids. And they sold everything and got their first apartment. And my dad was one of those kids. My grandmother didn't have a college education, and what do you do if you don't have a college degree? You go become a realtor. And she actually started before an MLS was there, having the kids cut out all of the listings on the newsletters and organizing all of the properties. So that continued on even to when she was my abuela. And every Sunday when we would go to church, she would have me running out open house signs, and then I became her helper, probably around the age of like 9, 12. Yeah. So that was my first exposure there to real estate with her. And I got into flipping motorcycles, realized the numbers weren't too good with that. I was familiar with the real estate a little bit later down the road and got into understanding house flipping, not actually doing it, but helping a lot of other people get very wealthy.
So motorcycle flipping, tell us that. I know you shared that story with me while we were having coffee and sandwiches the other day. Tell us that story. How do you go from motorcycle flipping to flipping houses?
It's a pretty fun story, man. Right after high school, I realized college wasn't for me. And what I wanted to do is I wanted to pursue my passion. The absolute worst advice I could tell anybody is to pursue their passion, because it's normally not the thing that pays the bills. So what I started doing was I actually took everything that I could find that I'd accumulated by the age of 18, and I went to Craigslist. Most people know what Craigslist is. Mm-hmm. And I took that and I traded everything that I had for a stolen motorcycle. And I wrecked the motorcycle. And that was actually starting my career of figuring it out. And so I bought this motorcycle, cleaned it up a little bit, traded it for a legal motorcycle, and kind of started to find this business of the people that I met online. I would then be able to strike a deal and trade up, right? I always heard a story, someone took a paperclip and then ended up with a house. I believed in that, and I knew I could negotiate my way up. So I started with the motorcycle and kind of became the motorcycle guy in my area. Then I had people reach out to me and they were like, hey, could you help me buy a motorcycle? And I was curious of what they were doing kind of around the same age to actually be able to afford a motorcycle without having to trade everything that they had in possessions. And come to find out that was wholesaling, just trading real estate in our area being Washington, D.C. And in that place, it was just booming, right? Very competitive, very high level. And I tried my hand building for a while. And I obviously, with my grandmother, very familiar with agency, right? She had explained to me through the ages of kind of how agency worked is that, you be there, you listen to people, you find out what is it that they need and want. And what I did is I literally just started listing properties. And that's kind of how I got my start in real estate, understanding that, same as a motorcycle, you buy something that's not necessarily the most desirable thing, you clean it up, maybe put a little fresh paint on it. And, you find somebody who's willing to pay a little bit more than what you got at it. So it was a really relatable thing, but I started to enjoy a little bit more money being made than a couple $100 on a motorcycle.
Yeah, of course, man. Of course. Can you tell us a story from your childhood that illustrates your family's passion for real estate? I know you shared a little bit, coming from church on Sundays, putting the signs, you know. So I'll share this story with you, right? There was a one moment for me, right, when I was 16, when my mom kicked me out. And when she put me out and I was sleeping in the trains and in the rooftops, I realized that the human beings adults needed two things: real estate, a place to live, and food, right? Those were two essentials. And I made a decision in that moment, we have pivotal moments in our life. That was the moment that I made a decision. I was going to own a lot of real estate because I was never going to experience that pain again. And it was years later when I actually materialized that. But it was in that moment that my unconscious mind, that wasn't a conscious effort, that wasn't an unconscious effort. Do you remember that moment for you that you were like, yeah, this is the moment where this happened for me, where I made that decision that real estate was going to be my way to wealth?
Yeah, I'm going to go back to my grandmother, start there, because the story that she told me was very pivotal. And it was when she first came over here, immigrant, she spoke English, um, but was still considered a minority, right? Being a woman in business, my grandfather's washing dishes. She got her agent's license, and I'm probably been here a couple months. And then she signs up at her local brokerage, and I'll never forget the story. She took me to the same office. I'm actually met the guy that she told this to.
Mm.
But she looked the man in the eyes when she first signed up as an agent. She said, "I'm going to be a millionaire this year." I think she said first it was, I'm going to sell $1 million worth of real estate my first year. And she goes, "I'm going to be a millionaire." And the guy, she goes, I'll never forget. He looked at me and says, "There's no way that you ever could, right? That's cute." And she goes, that lit a fire under me. That was my calling every single day to find out, how do I prove this man wrong? And funny enough, she ended up selling to all the minorities in Washington, D.C.
Mm.
And no one wanted to deal with anybody, right? Because over there, we've got everybody from, Asians, Africans, European, everybody, Hispanics, everybody there. Nobody else wanted to deal with it. Dealing with just other people from other cultures. And she embraced that, right? She embraced to say, hey, the one thing that you said that's going to hold me back was actually the one thing that put me ahead. And she said, I brokered so many deals with people and opened up so many businesses and gotten people into so many houses that never even had a chance before. And she goes, we out competed them. And she goes, now they built wealth and did everything there. So that was the first kind of time that I realized that that there's going to be doubt cast, but the dirt that they throw on your name is actually where your flower grows. And what I always took into my mind was that, tell me that I can't. And I remember having one of my mentors. This was my pivotal moment. And this is about 19, 20 years old. And I had a mentor look at me. And first she told me to take off of my voicemail to say, and God bless. I always had that on my voicemail, right? Leave a message and God bless you, right? And she told me to take that off. And she said that you would never be successful in this business, especially in Washington, D.C. I outsold her that next year. Mm. And then past that, I actually put a larger portfolio together within 5 years. So Bonnie, I was right. And that was the thing, is my whole career has always been everyone telling me, hey, you can't do this, you can't do that. And that was kind of the first moment for me, right? Especially being a student in the game. You look to be able to seek education, but man, that first person, I'll never forget that they tell you, hey, you can't do this, right? You'll never do this. Oh man, that gives me goosebumps just thinking about it, because it's like, I got people telling us right now that we can't do what we're doing. And it's like, we're running laps around everyone. And I don't have anything to prove. It's just, I think a lot of people are scared of actually going out and taking risks and actually seeing what's the best version of themselves to become. And I've used that to empower myself. And that's where I start to find my challenge and my growth, is where people don't have faith. That's normally where I lean in and grow mine.
Oh, I want to talk about that. I want to help people. We want to help people here today and give them that muscle, right, to take risk. I just told you, right, we're doing a 12. Right before we got started, we're doing a 12-unit redevelopment. We're coming to wrapping it up. We're over budget. We've had surprise after surprise. And I go ahead.
It's like a normal real estate
Yeah,
project.
exactly. It's normal, right? And and here I go and I buy 3 more properties this week, right? With that one, right? So it's like, hey
Yeah.
man, where did this thing come from about with risk? But let's talk about that in a minute. I want to ask you, where do you think that comes from?
I pulled that majority of the time from my father. So my father passed away when I was 2 years old. He died of ALS. Incredible soccer player, absolute outstanding man. But on his deathbed, he looked at my mother and said, "Don't cry because somebody else has it worse than me."
Right.
So I don't look at it necessarily so much so as grit, but I look at it so as an opportunity that it'd be disgraceful for me not to apply my 100% self to what opportunities that are ahead of me. No one has the answers. It's our job to go out and find the answers and apply ourselves to the 100% to the best of our ability. And it's not grit, right? I cry as much as everyone else. Like I have my problems, my pains, everything. But what I find out, and I always hold on to those words, what my father said is that somebody else has it worse than me. So I'm not going to sit here and cry.
That's grit, brother. That's
Yeah.
literally define grit. You're gonna go, right? You're gonna keep going, and you're not gonna make excuses for yourself. So good for you. I want to talk about something you said, right? You taking risk. You're a developer. You're doing some big things here in Tampa, in the city of Tampa. What would you say to someone that's out there that's saying, "Hey, man, how do I do that? How do I develop that muscle of betting on myself, taking the risk? How do you take a risk without managing the fear, and how do you manage the fear of losing?"
hmm So first I'd say is that you have to remove fear, and you have to understand that fear is a creation that we have made. It's not something that our God has actually given us a spirit of fear. He gave us a spirit of faith. So fear is something that we create, and what our mind does is that it actually creates fear of a false reality,
Mhm.
and it's actually made to create a protection, a layer of protection for ourselves to stay in a comfort zone, and not to go venture out and do something that might be different, right? And we consider things that are different fearful or scary, right?
Mhm.
Uh, we create that fear. So once you actually realize that most fear is actually self-created and a obstacle that you have created, you also have that balance to be able to go figure out how not to be fearful, right? And once you actually think through things and you quantify things, fear goes away very quickly. To go to your original question of how do I manage risk, I had to figure this out the hard way. I had a very large real estate portfolio a couple of years ago, and this is the time during COVID. Pricing materials go up, a lot of chaos happening. And when the bottom fell out for me, I hit the hardest point in my life to realize that I did not trust my judgment, right? A lot of the times I think a lot of young entrepreneurs get into is that they think they're a lot better than they are. And that's the biggest weapon the enemy will use against you, is for you to think that you are better than you are, because the enemy will let you play right into the hand of bite off more than you chew.
Mhm.
I walked straight into that trap. So I hit to a point where, I had a couple kids, newly married, about to take down a multifamily property. And I hit that point where I looked at myself in the mirror and I did not trust my decision making. I then took to the computer, leveraging technology to understand what makes a good decision. And it's actually two things. I created the technology and I quantified every decision that I made moving forward. So the two things that make a good decision are risk, right? The likelihood that risk arises. And then second would be the severity of risk. So you can actually put this on a matrix. So what I did is that you have you have 4 boxes, right? So your
Mhm.
vertical is the severity of risk, and is the y-axis, and then the x-axis is the a severity of loss. So what I wanted to do throughout this whole process was I wanted to make sure that every single decision that I made was a successful decision. And I wanted to make sure is that I didn't keep going backwards, and I didn't do something because of ego. And that's the biggest problem that I realized that we all think, is that we all think that we're smarter than we are.
Mm.
We all think our decisions are a lot better. We get greedy, we get a big head about things. And then what we do is that we blind spot ourselves on the things that could actually take us out of the deal. And that's really the big thing. I just quantify with those two decisions to say, hey, is something actually going to be a good decision or not based upon that risk profile?
So I just want to make sure I'm hearing you correctly. So what I'm hearing is that you manage risk and we all have a dose of fear in every deal. I believe that every investor, every deal you buy, there's a little bit of fear. There's always a little bit, but we all know how to dance with it. But what I'm hearing you say is that you manage your risk, and when those emotions come up of if this is the right thing, you have a logical way to process it, right? Which is very similar to the way I manage risk. I sit here and I study the market. I'm a student of the market. Before I do a deal, I'm sitting down, I'm looking at the data. I'm looking at, okay, what's my numbers? Okay, so if I'm doing a flip, is this my ARV? Why? What's my top number? What's my middle number? What's my sell quick number? What's the least I could do to get the most amount of return? I'm looking at all of these things, and all these things compile, allow me to make a strong or good, solid decision. What are the rents like there? Can I get that? How fast can I get that? What's the interest rates, right? So I'm a student of the game, which keeps me humbled, man, because I've been wrong a lot in the past 2 years about what I think the feds are going to do, right? The feds are liars, right? Jerome Powell is a liar. I remember reporting on this podcast in 2020 when he said, we are going to hold the rates through 2024. And I remember party time. I put my whole team and said, party time, we're going to keep buying and we're going to keep rolling because the rates are low. We're going to keep making money. And here we went. 2 years later, boom, they changed it. So I've been wrong. My anticipations have been wrong, but at least I'm playing, right? But one thing I do is I look at the data, which is similar to you. You do it very logically, right? I do it very logically, and I try to take the emotions, and that's how I tame the emotions of, damn, is this going to work out? Is this not going to work out? How is this going to, you know what I mean? Just straight numbers. But I want to talk about fear, because you mentioned fear and faith, because I think that's the big difference with the entrepreneur, successful entrepreneur, right? Is we're constantly pushing forward. Fear. You know, a lot of people think that fear is false evidence appearing real. And I heard, and I'd like to get your take on this. I went to a seminar at the Millionaire Mind Intensive like 5 years ago. Workshop, great workshop. Learned a ton about money, and it's about resetting your mindset on money. Learned a ton. Apply a lot of the principles I learned till today. And one of the things they said, that the speaker said, was, what is fear? And fear is the anticipation of pain. And I was like, oh shit, that's it's true, right? It's an anticipation of something in the future. Like you said, we're trying to protect ourselves, right? That's where it comes from. We're trying to protect ourselves. It's an anticipation of pain, and it really, really, really hit me.
I think it's a superpower, honestly. I think that too. I think people classify fear incorrectly. I think people say fear and they use it as handcuffs, and they give it as an excuse, and it now becomes the reasons why not to do a deal, right? If you're fearful of the deal, there's a difference, right? You can have a bad deal, right? Or you can just be fearful of a great deal. And I actually think fear is fantastic because it's your natural intuition of the fail points of what could go wrong. And I think that once you just write down what you're afraid of and you write it down, and then there is a positively proportional correlation to that fear and profit, it's up to you how much risk you actually want to take, right? And that kind of goes back to my matrix where it's, you know, what's the likelihood of risk arising, right? So if something's very risky, right? And then if you have a lot to risk, right? Like I used to put a lot of my own capital forward, a lot of that. So that could take me out the game, right? As I started to do deals a lot better, right? I learned how to manage that risk where we start to spread it out a little bit more, where I can invest a little bit more operationally. Other people are able to set and get returns, right? And we kind of spread a lot of that risk out a lot more so and not do as risky deals. I mean, obviously I'm afraid of a lot of things happening, right? But I have that written down And no, now these are the things that I say, hey, if so and so happens, I have a plan. So I'm not fearful with it, but I'm prepared.
Mm-hmm.
So I think a lot of people, just get paralyzed with fear versus of like, if you just write it down and you get a couple people to talk to and you just say, hey, either I'm afraid because I don't know, or I'm afraid because I think that this could happen. And you just talk through it, you realize fear goes away really quick, especially if you got a couple, a million on the line or something like that. Like you'll get over fear really fast. And that's where I think a lot of people is they come up to say they'll use fear as a reason not to do something and then hold on to it and then keep using it as an excuse that I'm afraid to do this. I'm afraid to do that. I'm afraid to do that. I'm afraid to go broke.
Well,
I'm afraid not.
I'm afraid of poverty.
Yeah, exactly. I'm afraid of poverty. So now for me, like, I'm a fighter, right? So I'm going to do everything in my power to learn about it, learn financially, to educate myself, to make sure this is that, professionally, family wise, personally, like on all fronts.
Mhm.
Okay, cool. I've covered all my fear bases. So like, I'm not afraid of it anymore, but like, I'm actually embracing the thing that I was once afraid of. And, to kind of look at how, jujitsu works, right? And like martial arts is that you actually use the thing the enemy tries to take you out. And that's actually how you normally fight.
Mm-hmm.
And that's where it actually becomes a fluid. So fear is actually the best thing I think that people can have going into a deal, but you need to learn to embrace it, not run from
I love that you said that. Tony teaches that, Tony Robbins.
it. Mm-hmm.
He teaches that in one of his workshops, and he talks about learning how to dance with fear. You got to learn how to dance with it. And that's exactly what you're talking about. Jiu-jitsu is all about that. It's taking that momentum and using it against the enemy.
Right.
And Tony Robbins teaches that in one of his workshops. And he's like, you have to learn how to dance with it. I've learned how to dance with it using the strategy I shared with you, right? I'm a student of the game, and I get really geeky with it. I need to know what my numbers are. Boop, 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 boop. Whenever I'm feeling uncertain about a deal or something, I go back to the numbers and I'm like, yep, this is why I made this decision. The numbers still line up. Where was this coming from? Forget about this emotion. Let's keep moving forward. This still makes sense, right? Like this is the logic part of this. It's human nature. So it's learning how to dance with fear. And you touched on that. I like to talk to you a little bit about what you're doing. So you're a developer. We're in a weird market right now. Right? The real estate market is a real weird market. I reported yesterday on my market update. And so the market on the single family side, so we got two sides. We got the commercial, we got the single family side. And I want to talk about your project because you're doing something really, really neat here in the city. And I really I toured your property with you. I put it on my Instagram. So if you guys want to see it, it's on my Instagram. Yeah. Check it out. Because if you want to see Javier's project, the one we're going to talk about in a minute. But I want to talk to you about the market and what you're seeing in the market and what's your thought in the market. You're in Florida. You're in one of the hottest markets in the country, I think. Tampa, Florida is the third fastest growing city in the country as of, I think, a month ago, last time I checked. And so it's very competitive in Tampa. And you're doing some things. So I want to get your take on the market. We have interest rates. When I reported yesterday, we have interest rates. The 10-year Treasury was 4.7 yesterday, so interest rates are high. The feds are talking about holding higher for longer, right? We were expecting 3 rate cuts this year, not happening. We might get 1. If we're lucky, we get 2. Not good for real estate guys like you and me, especially developers, right? Because we paid the highest interest when we're building. It's not a stable asset, so the banks hit us hard. So development is down across the country, not in Tampa, not in Florida. Florida's just booming. But what we're seeing is people that were developing before these rate hikes started coming up. New development is not happening. There's not new money being taken out for development because it's just the numbers aren't adding up for a lot of developers. I'd like to get your take on the market and where things are as a developer, what you're seeing, and what are you experiencing in the market? And then I want to talk to you about your project.
Awesome. I think that there's 2 different markets. I think that the market that you see publicly trails behind what's actually happening about 6 to 12 months.
Mm.
So anytime that I ever hear about the market is so-and-so, right, I always say, well, I already felt that 6 months to 12 months ago.
Mm-hmm.
So then I look at where we're at now, and then that's actually how I try and predict of like, hey, where do I think that it's going to head moving forward, right? And I wouldn't be surprised if they raise rates by the end of the year.
Mm. I didn't want to hear that one, but that's,
Oh no,
you
you
got
want
to face,
no, you
gotta
want
face reality. That's a possibility.
you,
That is a
uh,
possibility.
you want to, you really do. You want them to raise rates right now. Because what's happened is that in the last 10 years, we've had the largest bull market ever. So what happens is that when you have a lot of people buying in the same asset class that we're currently buying, like you had in multifamily, you have a lot of competition that then drives prices up, right? For
Mm-hmm.
example, yesterday, just to kind of use the stock market example, you have
Mm-hmm.
Chipotle trading at 60 times earnings. I mean, that goes against all principle, right, of
Mm-hmm.
investment. We've lost our investment principles, and everyone thinks that they are better than they are, right? So what's happening right now is that it's causing people who actually understand and appreciate financing, the basics of financing, to then succeed, right? So if you understand the fundamentals of business, right, you'll be just fine, because the cool thing about real estate is that we have a leveraged return, right?
Mm-hmm.
So when we go to do a deal, what I factor in is I actually just look at my cash on cash, right? And then you have a cost of capital. So we actually normally put in, like, let's say, for my last deal, for example, I put $250,000 of my own money into an asset class that they told me that was a dead asset class, an office building, and I made $2.5 million on that. So it's about 1,000%
Mm-hmm.
return, right? If the market goes up, interest rate goes up a little bit, yeah, it costs me an extra $100,000, $200,000. But if you do enough good deals, you won't even notice it, right? It's just one less car that you get to buy. So it really is the cost of capital goes up. It doesn't mean that deals or anything are worse. I think the best thing that you can have is bad news, right? Because bad news allows you to negotiate with the seller. Because if you know how to negotiate, right, you get to use the news in your favor. You already
Mm-hmm.
knew the market was terrible. It's already been tough. We already got through the really hard part, which was navigating the new market and finding the delta that sellers actually say, hey, my property is worth more than it is. Everyone understands right now with real estate. Now it's come to reality that real estate is not as worth it as much as it once was, because of speculation, right? So a lot of the dumb money's out of the market. So now it's time for real operators to start playing ball. So I mean, I'm actually starting to see lenders start throwing money at deals, because that last year was tough because nobody wanted to finance, right? And nobody wanted to come down on their price. Now we go into this new market that people are being a lot more flexible with their financing terms. They understand that they actually need to get out now before it gets worse, because it's actually going to get worse. I think the next 5 years are going to be absolutely horrendous for the real estate market for just traditional people. But we, as an investor in the real estate market, if you're not speculating, just say flipping or doing stuff like that, or if you adjust your prices, that's good. I think in the next 5 years is that you're going to see some of the greatest real estate companies ever be built. You have a lot of the guys who enjoyed the bull market of the last 10 years, so on and so forth. They look like geniuses, but they're not doing deals anymore, right? Because that model once worked, it's completely changed. And being able to understand where is that market currently, I really think more than ever, I think that we're in the best position. It looks bad from an interest rate position, but when it comes down to actually negotiating, doing deals, you and I were used to higher interest rates. So when they tell me, I'm like, oh, I got to pay 12, I'm like, that's great. That's awesome.
It's not. Yeah, people get caught up in interest rates. I always share this with my
Just do better
team.
deals.
Right, my first investment, my first property in 2007, my first duplex. I was a broker. And I had a 780, 750 credit score back then. And I got the best rate for myself, right? 7.75 was my interest rate, right? And here we are bitching because we got a 7.01. And I'm like, hey, man, hey.
Yo, people were laughing. I was talking to my dad. He does my stepfather. He does stock markets, right? And he goes, "Hey, he's like, my first house was 18% residential first house." And it's like, if you look historically where we're at, like this isn't out of the norm. Like it hurts because we've had such a forgiving market. But it's really good because in a bull market, everyone looks like a genius, right? So we're really going to start seeing operators who actually know what they're doing. it's going to be very rewarding. I'll say that. So again, you take the fear of the market. Okay, what am I fearful about? Oh, wow, I just got a little bit more cost, a little bit this, a little bit that. Once you think it through, man, like we're actually in an amazing time to be in business.
Mm-hmm. I agree. That's a great reframe. It's a really great perspective to look, a really great way to look at the market. Let me ask you a question about Florida, because I've looked at deals in Florida and the math doesn't math, man. And, there's some markets like Florida. I mean, Austin is cooling off tremendously. I think they're down like 15%. You got markets like New York. I wouldn't say never, but I won't do business in New York. California, another state I won't. And the math just doesn't math, man. So I'm looking at deals, in Florida, and I'm saying, how are guys doing deals here? How do you math? How do the numbers make sense? And I talk to a lot of investors, a lot of guys in my network that live in Florida but don't do business in Florida. And they're like, yeah, I live here. I love the weather here. I love here. I leave here 3 months of the year, and then I'm back here, and I love it here. But I don't do business here. I mean, I buy deals in Ohio or here or there, and it's just the math don't math. How are guys doing deals here in Tampa? Because I know you're doing deals here. How do you penciling the numbers?
So for us, there's a couple different ways. It's that creativity wins for sure. The biggest problem that we actually have in Florida, kind of a headwind, I think, would be the hangover from COVID. So we have a lot of people who are moving in. And the biggest hurdle that you see for easy properties, so market properties, single family residences, stuff like that, you have a lot of people who are selling their property in another state and moving in. Mm-hmm. So you have people making 1031 exchanges moving in. So they can be a lot more competitive, right? So if you're used to buying it at cap or something like that residentially, being able to come into the Florida market and finding something that is an 8 cap that maybe you could drop down to like a 6.5 or a 7, you can start to be a little bit more competitive because a lot of people are investing in this market right now for tax breaks, right? A lot of local investors, so on and so forth. And if you play the market, you're going to get the market, and it's not going to be enjoyable because a lot of people, you're playing against a lot of real estate companies across the United States. For what we do is we like to, if everyone's going through the front door, we like to go through the back door. And what I like to do is I like to find a bunch of people who are local, build some relationships, I like working with other investors who can afford to take a loss, right? So I like to find properties that are a little bit hairy, right? Aren't necessarily the best, obviously a little bit beat up. So I like absentee in-state landlords. So what I do personally, and this works across the United States, but more than ever works really, really, really well in Florida, because Florida used to be a very big retiree state. So a lot of people have low leverage on a lot of properties, and especially investors, they might have 10 to 20 properties there. So what I do is, instead of thinking, hey, it's a difficult market, I find too many deals, right? My biggest problem is that I don't have enough people to actually service all of our properties. So I just buy bigger properties so we can service, 1 or 2 deals at a time. Yeah. Well, for us, it's focus, right? Mm-hmm. So how did I get to that point? How did I navigate? How did I buy a 12-unit property when everyone else couldn't find a property, find any deals or anything like that? What I did is I just focused on very high equity properties, and I found investors. So not residential people, right? Everyone already hears, like, if you have a residential property, you have to go in, talk to somebody and, take their house pretty much. And it's just not a good scenario. And they don't have a lot of room to negotiate with. Versus if I go to somebody who has a couple $1 million in equity on their portfolio, I'll buy the lowest part of their portfolio because they can afford to take a loss on that, potentially even write off some losses on a property. And then what we do is that we create a win-win scenario. And then for the investor is I'm able to buy in bulk, right? So I like purchasing portfolios. I like purchasing multiple properties or larger properties, something that's non-performing for somebody or a tenant's on the way out. Because that person can afford to take a loss, and everything's negotiable at the end of the day, mm-hmm. right? So I think that Florida's lazy when a lot of people say that they can't find deals and stuff. I just tell everybody you're not making enough offers. And there's a lot of people here, right? There's a lot of people. I mean, we can find a deal in about an hour, because we just go out and for every property that's on the market, we comp it, and then we just send an offer out to say, hey, this is where we can perform. If you're interested in doing this deal, right, let us know, and then we can go ahead and negotiate. We go through due diligence, and then if we have to retrade the asset, it's a very fair deal, but we're communicating with people who understand you don't have another option right now if you're going to go to the market, because somebody's not going to be able, you would have to find an agent, which most of them are that competent. So if you're self-representing yourself and then you're talking to investors, it's a very just straightforward answer. And at the same time too, I think there's a lot of people who play in that space, especially when you talk wholesalers and agents who are going to go ahead and tell false pricing. So there's this perceived pricing with deals that make it a little bit more difficult. When you talk to investors and you say, hey, I literally can close in a week and take this off of your books from a loss, you're losing money on a deal, say something like that. I think when you talk to investors and you actually look on performing assets and you look at stuff that is portfolioed, right, and they don't really care about it, and you exude confidence and you can perform on it, there's a premium right now on people who can perform. So
Absolutely.
that's the
100%. 100%. I want
to more offers.
Yeah, that's legit. That's that's one of the things I teach my students, right? It's like, hey, we got to keep a compelling scoreboard. What's your compelling scoreboard? Where are you? What do you want? And what's your scoreboard? How are you keeping track? And that's one of them, right? So the guys that want to do more deals is like, okay, how many offers are you making? So that's a lead indicator. That's a lead indicator. So we just track, hey, how many offers is going to take you to get your one accepted deal, and then we just go from there. So we know you want 5 deals, you got to make whatever 30 offers, 40 offers, whatever that is.
I've got something I've coined in the last year is never underestimate the loss that another investor is willing to take.
That's a good statement. Never underestimate the loss that another investor is willing to take. Like the same saying of another man's junk, it's another man's treasure, right? Like
100%. So I have one perspective to it, and then it's like I've talked to a lot of guys who are negative on a property, but they're sitting on a couple $1 million. So they're willing to go ahead and take a loss on a property, potentially write it off on taxes, right? But where a wholesaler would be looking at it, for example, to say, well, hey, you owe X amount, or trying to do a subject to, and you get all fancy with this and stuff. And it's like, hey, well, I can buy it at this price, right? And then the ball's in their court to figure out how we get to closing.
Yeah, that's legit. I want to go into your project, right? You got this really cool thing you're doing in Tampa, this really cool building that you purchased. I think you said we walked it at 60,000 square feet, correct? Am I saying that correct? And you have this really cool idea of what you want to do. It's an office building, right? So I'll just give people perspective. It's a commercial office type building, and it has a bank. It had a bank on the side. So I had one of those drive-through things. Again, if you want to go to my Instagram, check it out. Martin Perdomo, the Elite Strategist, look it up and you'll see it. And you have the bank on the side, and then he's got this big, beautiful building, this big lot. And you're going to be redeveloping that, but you got this really cool idea. Can you tell us about what it is that you're going to do? It's an office building. Right now, the office market, right? There's a negative connotation in our space with the office. So those of you that are in the business, right, that are in real estate, you know that the office market is hurting right now. There's a lot of vacancies and COVID. We have a lot of those mortgages are being reset because commercial mortgages are not fixed rates. They're being reset. Those mortgages aren't performing and they're not cash flowing. So there is already some blood on the streets with some of those offices. I'm seeing buildings. I'm sure you've seen that some of these reports where some of these office buildings are selling for 50% for where they were purchased 4, 5, 6 years ago, or a few years ago. And it's like, holy crap. But you are going after it. Tell us about it. Tell us your thinking. Tell us what you're doing with that space, because you're doing something really good for the city of Tampa. And go ahead and share your vision with us. What is it that you're doing with there?
I appreciate it, brother. So what we're doing is we're building a 200 private office, 2 executive suite, and state-of-the-art professional center. And that 10,000 square feet, it's an event space. So we have 3 floors, and it's going to be completely dedicated to entrepreneurs, to business professionals, and really anybody who is looking to enhance their freedom through their professional abilities. And we have it here located in Tampa. It's about 5 minutes away from downtown. And I'm really bullish again of just business, right? Reason I am bullish with it is because I see all of the other headwinds right now, that if the economy is getting more tight, the government's already printed enough money, everything's getting more expensive, inflation's going like crazy. People have to get back to work. And I think that there's been we're now getting past the COVID hangover here, that everyone thought they could work from home. People thought they could get by off of savings, and now everybody's savings are getting depleted. So everyone has to figure out something to do. And what we're doing is that we're realizing, actually, again, going back to what I said before, 12 months ago, right, was really when the peak time that they said office was bad, right? No one's saying right now the office is bad. If you look in the news, what you're seeing is you're seeing now the transactions closing. So what happened in December of last year, basically the everybody's sentiment, I met with a guy who's managing $80 billion. And he said, what you're going to see is that right now that there's a very negative sentiment. This is last year, right?
Mm-hmm.
And what you're going to see is that because a lot of people have some books on their portfolio, I have some properties on their books that are very bad performers, they can't add new offices. So as you start seeing these transactions start to happen, they're actually writing these properties off of their books, now creating space for new, better deals, right?
Mm-hmm.
So come January, everybody's sentiment is completely changed, that they actually like office. Matter of fact, businesses, you look this up, businesses that own an office have a premium for investors, because they understand the ability of and the importance by having a team in office to be able to communicate and deliver the best product for their clients. So you're going to see a resurgence of a lot of office. And again, 6 to 12 months out. Okay. So now 12 months from here, you're going to hear, wow, office class are booming. A lot of offices are growing. A lot of people are doing a lot better because all of the craziness all the dust is settled. So what we're doing in development is I'm always taking about a 2-year bet anytime that I do anything, right? So this bet is not just a bet on Tampa, but it's also a bet on the professional market, that there's a lot of entrepreneurs in our area that don't want to go downtown. They don't want to go work with other attorneys and everything like that. What we're doing is that we're taking it not as an office space. We're taking what was once an office building and creating a professional center. So it's a place that you can hold community, hold events, and then be able to hold meetings. And what we're focused on doing is we're focused on the network and the community, being able to connect local like minds, to be able to connect and see how they can actually add value to each other's businesses. And there's a big premium on being able to have a space that does that. And there's not a lot of spots around the United States that do that right now. And it just so happens, as far as our asset class, we do about 6 times to 10 times as well as an apartment building is in regards to cash flow. Because the thing that's most important to our asset is that we care about our tenants being successful, so then they obviously can pay their rent, versus right now it's like, there's a lot of other types of asset classes that have already been squeezed and now they're only going to continue to get squeezed. But what you're not hearing about right now is you're not hearing about the office markets or the multifamily markets and the multifamily buildings that are technically underwater right now, and that those are going to need to be retraded in the next couple of years, and those won't pencil out. So that's going to be there's a couple different asset classes out there that we've kept an eye on, but we made our bet on this building here, and I'm looking about 2 years out. It should be the center for entrepreneurs here in Tampa, Florida.
It's a
Very bullish.
great space, great vision you have. I seen the video and everything.
Oh,
It's great.
We'll put your office there too.
Yeah, man. Great space, brother.
It'd be great.
What advice would you be sharing with an entrepreneur today, or someone that wants to start to create wealth? What elite strategy would you give that person listening to us today that wants to get started? in real estate or in business in today's crazy world, right? Because the world's always crazy, right? There's always something, right? If it's
Always.
that COVID, it's this, it's that, this is too expensive. It's always something we have to navigate. What advice would you give to someone? What elite strategy would you give to someone today that wants to get started in business?
I'm gonna give you two. First one is anybody that you look to seek wisdom from and advice. Ask them about their real estate portfolio, or ask them about their bank account, or ask them of the last deal that they transacted. So what is happening, I think, tremendously in the last couple of years is that you have a lot of people who've done one or two deals and they think they're geniuses and they don't own real estate. They don't have cash. And they're completely irrelevant in the marketplace. And then it becomes the blind leading the blind. And unfortunately, right, I see a lot of people who still think wholesaling is a great business model and they're wholesaling themselves straight into poverty, right? Is the people, if you study the markets, right, and you actually talk to people who are wealthy, they're very big about assets.
Appreciating assets.
Right. Well, accumulating assets, right, and just putting assets together because assets give you options. And that's my first thing. Is I would say is that qualify who you're taking advice from diligently, right? The same way that you would do diligence on a property, do the same diligence on a mentor. Because what you don't want to do is you don't want to take advice from somebody who's doing a complete different strategy. Because you need to also recognize that the game that each one of us is playing, there's no one size fits all. But there's a formula to create wealth, and that is through assets. And that's really the big part. And then the second piece that I wanted to say is that don't take criticism from don't take criticism from anybody that you wouldn't take advice from.
100%. That's good sound advice. Very good sound advice. I want to unpack a little bit in the last few minutes. We have a few minutes before we have to wrap it up. But the last few minutes, I want to unpack a little bit, Javier, as to how do you qualify that person, right? How do you qualify a mentor? Because I think you and I talked about this a little bit when we had lunch. There's a lot of fake teachers. I actually, what's his name, wrote a book on that. Robert Kiyosaki. I don't know if you read that book. It's a great book on fake teachers, right? Fake Teachers was one of his recent books. I think the one before last that he wrote. And we saw it a lot. I've seen it a lot over the last few years where you got these guys hosting meetups, real estate meetups, and they've never done a deal. Yet they're up there. And there's nothing wrong if they're bringing in guys if they're providing value by bringing in guys that are actually doing deals. But you got to be very careful on who you are listening to, right? You are who you spend time with, who you're listening to, and what you're watching, what you're letting in through your eyes, letting in your ears, and who you're spending time with, who you're hanging out with. Those three things are extremely important. How do you vet someone? How do you do that? How does one do that? So someone's listening saying, great, how do I get around Javier? How do I get around Martin? How do I vet them? And when I do find them, right, how do people even know that because I have a podcast doesn't mean I own assets?
Right. Well, you can look on your Instagram, for example, and you can actually see your crews and your property. So that's one of the first things is I look at relevancy. The most important thing if I'm talking to because there's different types of mentors. I have a spiritual mentor, business mentor, father mentor. I've got mentors.
Marriage mentor.
Yeah. And biblically speaking, is that you knock and then you seek, and then the door will open. So as far as a real estate mentor, and I'll break this down. So a real estate mentor, I ask to go see their property. When it comes to a construction mentor, I look to go see their job sites, right? If they don't have real estate or they don't have any job site to take me to actively, that's not their personal residence. It's immediately disqualification for me, right? Immediate disqualification. First time we met, I took you to my building, right?
That's right.
Show you where we're going. And a second one, like as far as a business mentor or like if you're looking any investing mentor, I would want to see their investment portfolio and then what investments that they've actually made and also what's their strategy and the cash that they're actually holding. One of the most important things I've learned is to actually qualify people through a cash method and understand of like, hey, what are you holding currently, and what did you return last year, and what is your projection and strategy for this year to do that? So I actually want to know people's liquidity. If we can't talk about money, then we're not going to make money together. The other part, as far as mentors are concerned, as far as like say connecting, dude, reaching out. I used to, when I was growing up in DC, I had no money, no knowledge, no anything, but I at least had some properties that I was helping other people sell. And every single time a developer would reach out, or I'd even call them, I just asked them to go to coffee. Right. And just asking somebody for their time and understanding how valuable that time might be. I love when people ask me like, hey, Hob, could we get together? Can we go get coffee? I want to pick your brain. I want to have community with you. I'm so amazed of how little people actually do that and just reach out, because they think that like, oh, it's a no or this and that. That's how I got successful. So I actually appreciate when someone reaches out to me and they say, hey, Hob, I have nothing to offer you other than just, maybe being around here, maybe later down the road, I can pay this one back to you. And I've done that with my mentors as well. And I've made them, millions of dollars doing that. But like at that time, it just took courage to be able to reach out to say like, look, I know I need to be doing something more than I am. I don't know what to do. And that vulnerability and just asking someone for coffee for 30 minutes to an hour, man, that's the biggest thing. And that's a big qualifier too. You want to find people who want to pour into you. And there's a lot of people out there. It's just, you have to ask.
Yeah, that's good. Good advice, man. And my last questions before we wrap it up is, what's the one thing that you haven't touched on that would bring a tremendous amount of value to our listeners today?
I've got 3. And it's my top 3 lessons learned across generations in real estate. So my first lesson would be resilience and adaptability. So the market is continuing to change, starting from where my grandmother, a Cuban immigrant, was able to come with an indomitable spirit. That's the importance of resilience and adaptability, having an indomitable spirit. It's really crucial for long-term success. The number 2 would be the power of relationships and networking. That real estate is fundamentally people's business. So from selling off market properties to collaborating with developers, trust and credibility are the cornerstones of a successful transaction. And number 3, last one here, is going to be embracing innovation and technology. It doesn't mean you spend all day on ChatGPT, but it means leveraging modern technology can significantly enhance efficiency in your business. So if you're flipping, if you're developing, if you're leasing, it'll enhance efficiency, but also your accuracy in real estate. So it'll help your profit margins a lot. If in a high inflation market, factoring those type of prices. But for me, using cutting edge tools and data analytics, it keeps you competitive in the market, but it also keeps you in the market. And that's the most important part. It's not about being the wealthiest, but it's about staying in the game.
Not being the wealthiest, staying in the game. I believe in creating wealth is a long-term game.
Yeah.
And it's time, right? I tell all my students that, like, hey, this is not about the one thing that you do that makes you successful overnight. Success happens overnight with the little things you do over the years, and then one day, boom, there it is. Is the little habits that you do, is the people you're spending time with, is your consistency on the things, on your vision and your commitment to going towards that thing. And it's not big. It's not the big thing. So I love that you said that about wealth, man, because wealth is a long-term game. It's not a I have a saying in real estate, and real estate is not a get-rich-quick scheme. It's a get-rich for sure if you stay with it.
Straight up.
Yeah. You know what I mean? It's a get-rich for sure.
And a lot of people, man, they operate with this. I'm sorry. It is they operate in this gap to say, because I'm not there.
Mm-hmm.
Every day you wake up with this sick feeling of like, I'm not at where my goal is.
Mm-hmm.
But when you start to realize of if I was in any other country across the world, I wouldn't have the opportunity to do what I have to do today. I have the opportunity to apply myself. And then you start working in that gain of like, hey, I have everything to gain at this point. It's a healthier mindset. And I think a lot of people need to focus on that before we start thinking about $1 billion, right?
100%. It's a mindset. It's a mindset. And I got from the book, I think you and I talked about it a little bit, The Gap in the Gain. It's focusing on the gain. And it's interesting because one of the exercises that the author says to do is that every day you sit with a question. What were my biggest wins today and how did I improve? And I do that. I was doing that before with the journal. I told you about the elite journal I use every morning. I was doing that with gratitude. And at the end of the day, that journal has the top 3 goals, the top 3 things I can do to get me closer to my goals. What were my biggest lessons? But man, what were the biggest wins today and how did I improve is a reframe. Because when you do that every day, right now you start to focus on the things that your win, they start to stack up over time in your mind. And you start feeling like a winner. You start feeling like, hey man, I'm getting closer. Yeah, well, I didn't get the big thing yet, but man, I moved a little bit closer today because I ran 2 miles, so my health improved because I spent time with my wife, dedicated time with my wife, so my relationship improved because I made this connection with this person, or I talked to this investor agreed to give me, to invest $100,000 in my deal. Like, it's just the little things you do at your wins. Or I spend 20 minutes, I met with my coach today. I spent 20 minutes listening to this book today. So I improved there. I improved here because I got this new strategy. So these things just start to stack up, man. And it's been quite interesting for me to do that because I do that exercise I do it every night now when I learned it. So that I think is key. My brother, if people wanted to get a hold of you and they wanted to connect with you or they wanted to figure out how to work with you, I know that you are looking for some capital on your project and things like that. How can people connect with you? By the way, guys, if you guys want to see his project, you just can go to my IG and you'll see it there. We walked it together. I have a little video. We could go do that again if you want to, Javier, one of these days. So how can people get a hold of you? How can people connect with you? Where do they find you? How do people just connect with you in general?
Definitely. So I'm always on Instagram. So it's Suarez_capital. And then if you want to actually look a little bit more into the actual company of ours, it's thesuarezcapital.com. So THESUAREZ capital.com. And you'll actually be able to see the video of our project. We walk through the entire building of where it's at now, where it's headed. And you can actually see some of the older projects that we've done in the past, which are amazing. We love seeing how far that we've come. But if you're an investor looking to then participate in a deal of that sort, maybe we're the best fit, maybe we're not, but at least what we can do is find out. We have an intake form on our website at the top left. You just click become an investor. And it's a 2-minute form that anybody who wants to connect with our company, we want to know exactly who you are first. And then what we'll do is we'll schedule a time to reach out and then be able to connect and see if there's some synergies that we can grow together.
Yeah, well, thank you, brother. Really appreciate it, man. Learned a ton from you. It's always great spending time with you and having these great conversations. My favorite topic, real estate, money.
Oh, man.
I love real estate, love making money. I love talking mindset stuff. You know what I mean? These are the things I really enjoy, like talking about faith and just progress, man. I love these type of conversations where we're all growing and people get to listen in on these conversations. Oftentimes I would dream, Javi, of being in a room where conversations were like these were had. I would dream like, hey man, how do I get around higher level people having smarter conversations so I can learn and get better? And because of technology, this podcast has allowed me to be that for others, where others can be in the room. We were having a conversation the other day when we were in your office, and I was like, hey man, people with me, you, and Jeremy, and Jeremy, and I was like, man, we're having this crazy conversation about the market and money and this and that and all these crazy, really high level stuff. And I'm like, man, people would love to be sitting in, just to be a fly on the wall in this room right now. So thank you, brother. Really appreciate you, man. Appreciate you coming on. And
I love what you do. And next time we do this, we'll grab a cafecito and
absolutely, man. Yeah, man. Absolutely, my brother. Appreciate you.
always, man. God bless you.